there's a pathway to retirement,
Right.
and people have a tough time navigating that pathway to get to that ending, right?
Mhm.
Which is retirement. And a lot of people just are in the wrong assets. They rely on somebody else for their future, and just, I guess, they struggle to know what to do.
Sure.
Right now, when you've helped a lot of people in the past, over several years here now, create that pathway. What are some of the things that you're focusing on with current market conditions, but also protecting what they've earned in the past so many years, because the markets have been very generous to people.
Sure. Yeah, almost to the point where people are a little complacent about what's going on out
Yeah.
there, and which is a dangerous thing. That's part of that emotional component of trading when you feel like the market's just going to continue to go up.
Well,
I
that's
don't
that
have to worry.
euphoria.
It's euphoria, and typically, where does euphoria enter into the emotional market cycle? Right near the riskiest point at time.
Yep.
But you mentioned a pathway. I really think it's more like a maze that you need to follow from where you are now to the end of the maze is your retirement. Well, some people have a really hard time making it through those mazes. So,
Yeah.
what if you could have somebody take you by the hand and lead you down the right path, right from where you enter to where you exit as quickly as possible? That's kind of what the proper education can do for you, because there are a number of things that are part of a proper education. It's not just knowledge, it's the skill to use the knowledge, it's having the right tools and the right resources, it's having the confidence to be able to do this in a way where the odds are in your favor. What's the goal of being in an investment, whether it's long term or short term? Well, it's to have a high reward, low risk investment or trade. That's really the goal, and the way that you do that is to follow what the people that are moving the market are doing, and that's that big money, the smart money we talk about. They have the clout. They are buying in such large quantities and selling in such large quantities that they will move the price. And if you have the opportunity or the ability to identify where those are, or those orders are kind of where they're living, so to speak, on a price chart, where are the buy orders? Where are the sell orders? And you can identify that before they enter the market. That gives you a huge leg up, so to speak. That puts the odds in your favor. That is what we call market timing, right?
Mm-hmm.
What most of you probably have been told that you can't do. The goal of market timing is to find a price where that price has the lowest risk potential, the highest odds of working in your favor, with high profit potential. That's where high reward, high risk trades and investments happen. And that always happens at or near the turn in price caused by these big institutions. And if you are not using something that can give you, with a high degree of comfort and accuracy, the knowledge that price is going to go up or price is going to go down, then you're gambling. You're just hoping, you're gambling. And if that's what you're doing, hey, do yourself a favor. Go to a casino, have some fun while you lose your money, because you're probably going to lose it in both areas. So we want to make sure that you have the ability to use something that is based on what truly moves the price of any asset or the markets in general, and you have the ability to do it with that high degree of confidence. So, we started, you mentioned that we wanted to talk a little bit about the retirement component of people's lives. And really, there's two parts to your financial life. One is that income accumulation phase, and the other is your retirement distribution phase. Both are important. And really, before you go into the retirement distribution phase, you really need to know how to address the income phase, because that's part of your retirement too. So when you're looking at retirement, and let me backpedal here for a minute. We talk about mindset all the time.
Yep.
And how important that is. And it's important because the mindset that you have really orients you to, and it helps determine your behavior based on a set of expectations. And if your expectations are negative, that's what's going to happen. That will become your reality. Part of what we do, and part of what confidence in investing does, is it helps to change that mindset to a more positive one, which will help you. You give you the greater chance of being successful.
Well, a lot of times that mindset is talking yourself into that confidence, right?
Exactly.
You can talk things to existence of being able to, okay, yes, first of all, you got to find your why. Why are you looking into the financial markets? You mentioned that earlier. Once you have that real reason on why you're looking into it, then create a path.
Right.
Create a path and have a plan to do so.